Hello, ladies and gentlemen. Welcome to this live stream. I hope everybody is really doing well. So, guys, we are coming very close to the month ending for April, and today is Thursday. Today is very important day for gold as well as a little bit important day for crypto as well. I'm not sure how it's going to impact the crypto market because. But what I can say for sure is today is a very important day. So today we have advanced GDP quarter and quarter at 4:30 p.m. Dubai time. So basically, it's roughly around, I would say, roughly around in the next three and a half hours or so. So the forecast is 2.5% GDP, advanced GDP quarter and quarter. So that's the forecast that we have actually. Now, if you look at the Jan 2024 numbers that we got for like quarter four of 2023, so that was like the forecast was 2% versus we got 3.3%. And if you compare the quarter one GDP of 2023. So the forecast was 2.6%, and last year, basically 2023, we got 2.9%. So of course, last year also they are by intentionally having a lower forecast so as to match up the or maybe I would say give us the best outcome possible. So what I feel over here is just try to have a look at the numbers for 2022. So in 2022 January as well, the forecast was 5.3%, and the actual number was around 6.9%. Because those times were a little bit far off, like recovering from COVID and all of the stuff. But down the line, what I feel is, and what I'm trying to tell you is that the advanced GDP quarter and quarter forecast for quarter one 2024, that is from January to March 2024, the forecast is 2.5%, and I do expect that US is definitely going to poise more than forecast, or maybe even equal to forecast. So basically, it's gonna come good actually. So I believe that if it is going to come good, I think gold is the dollar index is definitely gonna move up. But this also happened last time. Dollar index pumped and gold also pumped actually. Okay, both the things went simultaneously actually. So there is a possibility even gold will do some sort of a very wild volatility, and we will try to catch some move actually with a very low risk. Okay, we try to play with a very low risk actually. We will take that. Also, there are unemployment claims at this point. The forecast is around 214k. Okay, but I'm damn sure the actuals are going to be either under the forecast or at the forecast. So even the last month, if you see the claims were happened, and I think it was literally under the forecast, since like if you look at this whole year, majority of the time it was under. So basically I feel that the unemployment claims are also not going to impact much actually. The major impact that we can expect is only and only today is going to be like advanced GDP. So it's going to come good actually, guys. So you don't have to worry about it. It's already priced in. And I do believe that, I think the US is not going to, the US is going to do good actually. I mean, I don't believe that it's not going to do good actually. Okay, I don't have a reason to believe actually at this point. Okay, ladies and gentlemen. So that was about the today important dates of a calendar, which you need to remember. It's at 4:30 p.m. Dubai time, which is roughly around 3.5 hours from now. Roughly. It can be 3 hours, 15 minutes approx, but that's fine. Oh, sorry, 4 hours, 15 minutes approx. So now moving on to the economical perspective of how the tactical shifts are happening. So before I go down into my perspective of, the Bitcoin, you already know the plan actually, and we were anticipating on the hard-term time frame that wave 2 will come actually. The only thing is whether the top was in for wave 1, I was not sure. I was expecting maybe 69K one more time and then we can go for wave 2, but that's fine. I think as you guys knows that, you know, a few days back US Congress passed a bill to provide $95 billion worth of aid to, you know, a military support aid for various countries, of which, you know, more than $60 billion were allocated to Ukraine. And they mentioned that, you know, they will be supplying advanced, you know, weaponries to Ukraine. Now, I'm not here to discuss whether it's good or bad, but what I'm here to understand and make you understand what can be the possible implications on the market actually, and how. So, as I was of the opinion that they are not gonna give more aid to Ukraine, and maybe sooner or later, you know, we will see that the war is gonna stop, which is likely going to have impact on gold prices. The gold will start, you know, going slowly and gradually down, because what happens is when, you know, when there is a war, people tends to try to shift from you know, to high liquid assets, basically like metals, silver, gold, and so on, because that is the metals that are safe, and they try to save themselves from, you know, possible devaluation of their currencies actually. So that is the first thing. But now I think the war is going to continue more. I think gold now has you know, is going to keep on continue grinding up for like 2,500, as I mentioned, you know, from my target 2,500 to $2,800. Slowly and gradually it's going to go. Before that, of course, I expect a dip towards 2,220 and maybe even $2,200. $2,200 is going to be a little bit more greedy, but I would say, yeah, I mean, anywhere between these two numbers, I think you should be buying gold, and you should keep it for like few months. I would say 1 or 2 months maybe, and I'm damn sure you're gonna make it from like 2,200 2,220 to on the upside of $2,798. So that's like almost close to, you know, almost close to $500 gain on 10 gram OZ. Sorry, on a price per OZ actually. So that's what about the gold, guys. I know that's not a financial advice, but that's you know, that's from my analysis perspective. That's what I wanted to convey actually. That's what, you know, the gold chart tells me, that the gold is definitely bullish. I think we already checked the gold chart on the lower term time frame. We already checked the gold chart on the higher term time frame. So basically, the plan is still same. I mean, I discussed this you know, on this live stream as well. Overall, if you see here the gold chart on the daily time frame, we might pump it up for like a retracement to 2,700 or so. But as I mentioned, you know, on the lower term time frame, if you look at the 4 hours chart for the gold, I do believe that, you know, gold is likely going to do like 2,349 maybe, and maybe push down to 2,284, 2,265, and the worst case scenario is going to be 2,200, and pump it back turbo to $2,500. So that's going to come, guys. So I think that is going to be a good swing for you, for those who are having a lot of money on sidelines for, or maybe you have, you know, you can literally make 10% to 11% gains on gold actually. That's a good amount of money, guys. So that's one thing. Second thing is silver is definitely bullish. We have built a nice swing position on silver, and I do believe that silver is likely going to hit $30 plus upside mark in maybe like next few days. Overall, I believe that silver is going to go for that sort of a move on an upside. Maybe it can go one more move down towards 26.5. I'm not sure at this point, but overall, the high term time frame tells me that it's bullish. We are definitely going to go to for 30.3, 30.5, maybe even $31, but we are going there actually. So it's going to go there actually. So that's why we are just going to keep on building. If it goes down to 26.5, maybe even $26, we will add more and more silver so that we can have good risk reward. We will just probably move our stop loss a little bit far, but that's fine. That's going to give us a good risk reward, and maybe we're going to, you know, have a good entry, average entry. So that's what about the gold and silver, guys, and how this war is going to shape up the gold. Overall, I think gold is bullish. The war is going to continue, which is literally going to make gold more bullish. The pressure is going to be on gold because China is converting a lot of the central bank. If you look at the central bank reports, recently they converted $680 billion worth of dollars to gold. So they're just buying. I mean, I don't know why, but they just keep madly buying. They're just dumping the dollars in the market. So that's one thing. And the second most important thing is that the war is going to continue, and hence gold is going to be bullish. And now, some things are going to change from the Middle East perspective. First, I charted natural gas. So natural gas is also very low at this point, and I feel that it's going to have a dead cat bounce. I think I charted it. But if you really want to see it, so just look at yourself. Natural gas over here. Natural gas, cryptocom, capitalcom. Yep. So if you look at the natural gas chart over here, I did mention the natural gas is going to see a move. Like maybe a downside move, as I mentioned, from here to 1.8, but overall I feel that it's likely going to see a very interesting diagonal sort of a structure on a weekly time frame. It's like a diagonal actually. So I expect nat gas to pump to 2.8 to maybe 2.9, and from there one more down to 1.4 before the winter comes. And as soon as the winter start kicking in, the price is going to soar and it's going to pump it back up to $5 in the winter. So you just have to be careful. You just have to try and especially for the European countries or the countries that are very, very having cold weather, you have to be very careful. Because nat gas is gonna go pump maybe from now. Of course, I'm expecting a pump to 2.8, 2.9 after a small retracement or pull back to 1.8, 1.86. So that's what the plan overall, guys, for nat gas. Most important plan that you need to understand is oil. Oil is definitely bullish on the hard-term time frame, and it's just a matter of time. It's just it's like just a matter of time. The crude oil is going to explode. But as I mentioned, it might take a little bit more time for the crude oil to stabilize. But I think it's slowly and gradually going to go there. Today also it up like 0.5% overall. We have the harmonic as well. We have a lot of confluence. You see the harmonic. We have a nice support. The green line is support as well. So practically, there are two possibilities over here. One more move down possibility is always there. We might not move down as well, but overall the target is $120 minimum. Now that's like a very, very conservative target. In case if there is a full-fledged war or maybe some cause of a bigger issue in the Middle East, then you can expect the oil price to pump to maybe $150 and maybe even $200. So if oil pumps, 40% of the world economy is gonna shrink. They're just gonna, I don't know what's gonna happen, but they are 40% of the world economy. The countries, basically a lot of countries that are heavily dependent on the oil imports are, and they're just probably gonna get wrecked actually. For example, just want to give you some example, Pakistan, Sri Lanka, maybe even India, you have China, you have a lot of countries, a lot of countries especially. And also in my view, Egypt, because right now what Egypt is having their oil, but the problem is they only have enough oil to supply to their own population. So they don't have oil to supply, or maybe, more oil to, export. So that's the issue. These are the countries, they might face a lot of trouble. A lot of countries like Singapore and a lot of other countries we have, they might just hit hard actually. So European countries basically. So you just have to be very careful, if you're staying in these countries, you can expect the oil price to pump a lot, and you can't blame your political leaders for this sort of thing, because even they won't be able to do anything about it. Of course the crude oil pumps, so naturally the petrol, diesel, everything else is going to pump actually. So I think the safest way to have yourself cover is going to be the electric vehicles, because I do think if the crude oil prices jumps up heavily to 120, maybe even just surpass $150, the demand for electric vehicles are going to soar. And basically that also means the demand for electric vehicles soar along with, some precious metal, lithium is going to soar, and a lot of other things connected with the electric vehicles are going to soar basically. So a lot of metals that are connected with the electric vehicles, conductors, semiconductors, batteries, lithium, lot of things are going to happen. I mean, this is just the basic idea. I'm just gonna see, this one chart can tell you what's going to happen in future. Just one chart. You don't need to chart everything. It's a very common sense, guys, very common sense I'm talking. So basically this is like a one chart you need. Oil pumps to $120, $150, or maybe even just got above $130. It's going to have panic across the whole market and countries, and automatically the electric vehicle market is going to explode actually. I mean, they're just going to keep on going up. So basically, I would say right now, if you feel that you want to buy electric vehicles, maybe you might get it cheaper. But when you will be going to buy electric vehicle at that point of time, you might find it, a little bit harder to get it because of the demand and the supply constraint. Okay, so just have these kind of things in your mind. And of course, these are my guess. These are my own views and analysis, guys. So it's not a financial advice. So you can have your own research. But just like a basic thoughts and how the world economy revolves more around the crude oil. So just give me a moment, guys. My daughter is asking me to change a TV channel because she don't want to watch a choo-choo TV. So just give me a moment. I'm just gonna change a YouTube channel for her. Just give me a moment. I'm coming back. So basically, I'm back, guys. So basically, the crude oil price, the crude oil chart is very, very crucial, guys. Okay. Hey, Yusuf. Tahir, could you please check BTC 1-day and USD dominance in April 21? It's true that we have now. Thanks. Sure. Let's have a look at that. Hey, hi, Gabby. How are you? How are everyone, guys? And also, I just wanna tell you all, guys, that as I mentioned that the timing is coming very, very close. We are about to launch our new brand. Basically, I am about to launch my new brand, 21M Fashion. And I would like to thank Arslan. He has helped me a lot in designing. And we are just going to, I've also hired other designers, and Arslan is going to help me a lot in my view. He's going to be playing a vital role going ahead. And if you're hearing Arslan, thanks a lot, brother. And I think we are going to make a very interesting concept with this. So I'm just going to give you a trailer of what our new brand looks like. If you really just like to have a watch, go here. And right now it's only available for Indian market and UAE market. And still the sale is going to, we are waiting for an approval from the payment service providers, so that once they approve our KYC, then we'll be able to accept the payments. So right now, this is the website, guys. Just go in and check it once and just give your views how it looks like. And If you feel that if something needs to be updated or changed, it's gonna help me a lot, guys, because I believe that you guys all are my family, and just because of you, and you have motivated me so hard and pushed me so hard to keep on bringing new things, keep on revolutionizing new things from the crypto perspective, and that's like my passion. I'm so passionate about the whole crypto space basically, but I'm not like other guys who's going to push you or give you a dreams or sell you a dreams that something is going to go $1 trillion or $100 billion, or maybe like 100x 500x. No, I'm a very realistic person. Actually, I love to be realistic. That's why I've made a lot of money, guys. So that's a small venture I'm starting, and inshallah, as I promised that whosoever have filled the form in the Discord, I'll also be sending them a t-shirt, their t-shirts as well. So that's that's one thing. Hey Tom, please share some hopium. The hopium, there is no hopium, my friend. It's a pure chart, and as I mentioned, we are in wave 2 actually. So the dip chart for buying, my friend, and I'll quickly go into the USDT dominance chart first, and then we go to the Bitcoin chart. So the USDT dominance is the USD dominance, as I mentioned, this was the plan, a push up and then a dump, followed by, probably like a retest of some sort of 4.94% or so, and then followed by a further dump. In my view, that's the more likely scenario at this point. The worst case scenario, it can be that we might see one more push up to 5.2% straight away from here, because that can be an irregular expanded flat, and then might move down. So there are two possibilities over here from the USD dominance perspective, which we have to keep in mind, which also leads to our plan for Bitcoin. So overall, the plan for the Bitcoin as it stays, my target for Bitcoin now, it has been very, very clear. So now I'm just going to update the exact Fibonacci levels. So the target for Bitcoin is somewhere around previous week value area low of $61,800 and maybe even $61,000. So we have a nice demand, the daily demand that we have here. So basically anywhere, it can even bounce from 62.5 as well. So this is the fair target. I mean, this is the buy the dip zone for Bitcoin, and that's where I updated my order from $62,000 to $61,000 is what I am aiming for buy the dip. Now, in case if I see a perfect opportunity or a wave count on Bitcoin on the half and time frame, I'll cancel the limit, and I'll give you an exact accurate levels like a dollar level, so that we can get a good entry, and we can all stay on the same page and the best risk reward. But what I feel from here is I feel that the move on an upside clearly seems to me at some point. I mean, if you just look at here on the daily time frame, this is like there is no bear, there is no nothing to bear about. But yes, we lost the EMA 50 daily again, which is like a bear thing to me. So 64,000, I would say not 64 but 64,669 is the levels, is now a strong resistance for Bitcoin. So practically, I believe that right now at this point we are aiming for more downside rather than upside. The best level for Bitcoin in my view would be around $61,800 to $61,100, and this is what I'm aiming for on Bitcoin actually. So that's what the plan on Bitcoin, guys. I think everybody should be here, might be possibly expecting a move on, like going to 55,000, 52,000. Yeah, that's a possibility. That's like a worst case scenario we can have actually. But looking to the structure, this makes more sense at this point. Now, if you remember, I gave you two counts over here, ultra bull case as well. For now, ultra bull case is not valid because the structure doesn't say that it can be valid. So now our plan is only the earlier plan that we have for for Bitcoin, and which was very much valid. We almost rejected at the equilibrium, so I'm expecting it to form like a 3-tap setup over here. Now I'm just gonna probably push it up, pull up the here. Perfect. So a 3-tap setup, for a 3-tap setup to play out, we rejected from an equilibrium, took a liquidity, which is very, very valid in my view. So That's like a perfect 3-rep setup that we can have it. A perfect rejection from the equilibrium. Slightly missed my short zone of golden pocket. If you would have went to golden pocket, I would have given a perfect short over there. But for now, I think we are good. It's okay. I did not want it to short, honestly, if you ask me. So right now, I think this is how Bitcoin is gonna go. A 3-rep setup, $61,000, and that's gonna be our wave 3 here. Equal highs, dot, dot, and then further dump. That's all. That's what I am expecting for Bitcoin. I mean, that's how I see, Bitcoin is gonna move this way actually. So that's the plan. If you're talking about the low-term time frame, ladies and gentlemen, if you're just simply talking about the lower-term time frame right now for the Bitcoin, so the lower-term time frame scenario on the Bitcoin is going to be something like this: that the move that you're watching right now is clearly doing 5 waves. So practically, it also means that this whole structure that we are seeing from here is more or less like a 5 waves from here, a slightly move up to sweep up the highs to 65,000, and then run back turbo down to fill our limits to $61,000. So that's what, in my view, we are likely going to see for Bitcoin. And after that, I'm expecting it to run it up to as I mentioned, this is how I see. That's the way I'm watching Bitcoin. It's bullish. The worst case scenario is only the bear case scenario gonna kick in only once we start losing $59,000 levels on the daily time frame. Because once we lose the $59,000 on the daily, I mean, khalas, you are going to see some more wrecked on the Bitcoin. So right now, the strategy for you, for those who wants to accumulate alts, whatever else you want to buy only and only when BTC goes into this zone actually. Here, because even if alt looks good over here and you feel it's gonna pump, it's okay. It's okay to miss that pump for a bit, because BTC is gonna go down here, and as then when we go down here, because the high probable bounce is only and only going to happen from this zone. There's no other levels we're going to see a good bounce from. Yeah, there may be a bounce from after taking a liquidity inside these levels of 62,958, maybe like this. We just go down here, take a liquidity, and then we can get a good bounce to $65,000. Possibility is always there. But overall, I do see the bounce is going to likely happen. The bigger bounces I expect is to happen somewhere around from the monthly levels of 61,900 or 61,880 to 61,000, levels. So basically, this makes more and more sense in my view. Very, very similar. So practically, ladies and gentlemen, this is a wave 2 in my view. We should not be afraid of this wave 2 at this point. Yeah, we should be afraid of this wave 2 only and only when we start losing or closing the levels of $59,000. Losing $59,000, and this whole thing is going to turn so bearish, and we are going to turn ultra bear case scenario. So, or maybe the bullish wolf case scenario. You have the scenarios already lined up as we discussed in the previous stream, and all the scenarios are valid. The first case was the bullish case on the lower term time frame, which is very, very valid. You see my arrows, my plan, and it's perfectly following the plan. I've never been greedy about it. That we have to long here for like a swings. No, I might have lose one scalp over here, but overall, what I would say is this was the big buying opportunity in my view for Bitcoin. So basically, the structure is now going to heavily shift from it's going to heavily shift from here to basically to $62,000 or $61,000. That's the primary idea for Bitcoin. That's like a bullish case. Second is the bullish wolf waves, which is still a very valid one. Basically, which also means that we keep on dumping to 57,680. We get a good bounce from there to 63,787, and then further dump down to 56,580. A little bit more bigger accumulation. You see why? Because I'm saying a bigger accumulation is a possibility. I mean, why? First of all, why are we exploring even that sort of a possibility? The only thing why we are exploring is because if you look at the structure over here. If you look at the structure, how many days from the top BTC took at 39,500. So if you look at here to bottom, it took almost close to 12 days actually if you see here, from the top to the bottom, 12 days, when we literally bottom for like, this can be wave 2 or wave 1 at that point of time, let's say. And how many days we are already in from the top of here for like here. So let's say the bottom is in. So it's almost close to 36 days for like a bigger structure that we are talking about. So that is the first thing. So basically that also tells me that, the bottom can be possibly in for a Bitcoin actually. So that's something, we need to ask ourselves. Also have a very similar structure that I have. If you look at from here, since the top that we made in 14th of April 2023, and if you look at the bottom that we did, it was almost close to 61 days of a sideways or slow choppiness, or almost close to 2 months of slow choppiness, and then dump, and followed by a big pump. So if you look at here from this perspective as well, so since the top we did a top in 14th of March, and till the price that we are having, if you just compare the at this moment, we are already at 42 days. So even if you have to say that we need to bottom for a run up, so either first scenario is either we are already bottomed, or if we go for this bullish wolf wave scenario, it's like a very bullish case actually. It's not a bearish at all. So even if you do that, from the top, if you say maybe 60 days, if you count it, the 60 days is going to happen roughly around, roughly around, 60 days is going to be roughly around 13th of May. And this is where a bigger choppiness or accumulation happens. And then we go for a run up to $70,000-$80,000. So that would be a worst case scenario. More sideways choppiness, wrecked everyone, take everyone's money out of the markets. People are going to keep on longing, and they're going to keep on selling as well. They will feel like, oh, we are dumping more. No, it's not going to dump. Oh, we are dumping more. No, it's not going to dump. But they just keep on selling because of panic, and that's how the liquidity is going to create in the market. So practically, you just have to ask yourself at this point, basically how much you can risk to make good amount of money. Basically, the target is $78,000 in my view. One more push is happening. And why do I feel that happening? Because of the week of accumulation. That's a strong week off that we have. Just look at here. This week off is very much, I would say, valid. We did a ST over here. We did an ST over here. We went to SOV in phase B. We got a good bounce. As you can see, now we are retracing back. A small pullback that's going to happen, and then after that we go for a UT. So that's a very interesting theory that we have for a week off. If you remember, this week off, I identified this week off even when we were here actually around $61,000. I mentioned this week off is very likely to play out actually. So practically this is schematic 1 and this is schematic 2, but both the schematics are valid because the week off is in play actually. So, and hence, I believe that ultra bear case scenario is a very low probable scenario just in case. But yeah, this is a scenario, we have it, but it's a very low probable at this point, in my view. Very low probable, very low probable. So for now, I stick with this scenario that we have, and we should be buying the dips in my view. Unless this plan invalids, then we will just move on and probably look for another plan. But for now, this is the plan that we have, and we should be following this structure. We will follow this plan. We have the limit set, $62,000 to $61,000. Buy the dip, whatever you want, whatever altcoins you want to buy at that point of time. In my view, the altcoins that I personally like is FET, RNDR, INJ. These are the 3 coins you should definitely have it in your kitty when you're going there actually. And you should also be buying some of maybe Cardano. You should also be having a little bit Litecoin in your kitty, because Litecoin is having a structure, a very good structure in my view. And also you should have Pepe or Floki, one of the two you should have. So this is the bag you should have, and of course Bitcoin, of course you should have it, and Ethereum, of course you should not forget Ethereum as well. So I think this is what, just buy when we go here actually. Till then, just have patiently, wait patiently. You really want to buy, so just have patiently. When we go here, buy at whatever the price the alts would be at that point of time in my view, because the risk reward at that point of time will be very good. A very tight stop loss, very good entry, you're gonna get it. So practically gonna give you good risk reward, and that's how you play actually. That's how you make big amount of money with this play. So this is the plan for Bitcoin, for USD DOM I already mentioned, Ethereum as well. A lot of people were like, we just simply gonna go up from here to $4,000. I did mention that, in my view, this is like a wave one actually. So I'm expecting and anticipating a move on the downside towards a 2,950, and maybe the worst case scenario can be a double bottom like 2,883. So 2,950 in my view is a good levels for ETH to buy. 2,950 to 2,900, a good levels to buy. Accumulate a little bit of ETH if you don't have anything. My target for ETH is definitely gonna be minimum of 4,400, like making highs, and going up the 4,900. RNDR guys, it's a good levels to buy, but I would say wait a bit, wait for Bitcoin to go to our levels. I do think the best levels to buy RNDR would be around 7.2 to $7. That is going to be good levels for anyone if you really want to buy RNDR. Then if you really want FET, we already have FET stops. I've moved my stops at break even. I'll also update it because now we literally caught the bottom. I really don't see any reason for FET now to go to our entry if we are really bullish. 46% pump it gave us. So practically I see that 1.67 is my entry average. So it's like you should definitely be moving your stops at break even for this. I don't see it. The max I would like to have, if anybody would like to buy FET, I think the max you should be looking for FET around 1.9 to 1.88 levels. Maybe $2 is also good levels for FET, but I would say the beast levels for FET would be around 1.9 is the good levels for FET if you really want to add a bag. But just wait and see if FET is at 1.9 and when Bitcoin is. If Bitcoin is still not reached to our buy zone, then you have to a little bit wait actually. So have your plan that way actually, of course. Second thing is INJ. We sold INJ and our plan was this, like a 5 waves on an upside and a dump to $22, something like this. This was the plan if you remember guys, and it's perfectly following our plan. I think we are going to buy INJ again around $22, very cheap. We book at 8.5%, so it's very cheap it would be. So I think we would be buying INJ at those levels. Pepe guys, overall I am bullish on Pepe. This is the chart for Pepe. Everybody will like, we are simply going to pump from here. I do think that, it can pump from here as well in my view. But I would like to buy Pepe around this blue box. So give me the blue box and probably, we can just run it back turbo. And let's have a look at APT guys. How many times I've told you that APT will be bullish only when two things happen. First, once we start flipping 14.7, then we are bullish and we can literally look for pump to 0.886 Fibonacci levels and the daily levels of 18.3. So we did pump, of course we flipped and we pumped, so got a pump. When we came here and we rejected it, then of course it was very simple for us to say that the APT move on the downside. So right now what I'm expecting for APT is that if you look at from the 4-hour perspective, it looks to me clearly a dead coin at this point, but the way it looks like, I see APT doing something like a double bottom, or maybe even have a sweep of the lows one more time and then maybe give us a good bounce towards a $10. So this can give you a good bounce of almost close to 50% after sweeping the lows. So I think APT you should buy anywhere from 7.3 to $7. That's where you should be buying APT. So I'm expecting it to go more down on APT at this point. I'm bearish on it at this point. The structure has shifted to bearish structure at this point, so nothing to be bullish about it. Now let's also check what our friend asked us. Yusuf, what did he mention? Please check BTC 1 day and USD dominance in April. So let's try and check it. BTC, or maybe I will share BLX. Let's go to the BLX index. But before we go to the BLX index, let's also check CME gap actually. CME. Where is CME? Perfect. Well, if you look at the CME chart, let's try and understand. I mean, I already gave this plan actually. That the dump is a possibility. This was the plan actually for the CME. Let's try and understand from a demand and supply perspective, or a premium and discount zone perspective. So let's keep it very simple for everyone who can understand it. So let's say this is your premium zone. Okay, this whole thing is your premium zone because we rejected, we got a big wick. So that's like clearly making a big supply zone, and you can also set that a premium zone. And let's make this zone over here that we have here, the order block that we have, it's going to be your demand zone, or you can also say the discount zone. So I'm just going to make it the premium zone color into red. Hold on. Background as red, and the premium zone into green. So basically, normally what happens is, just try and understand from the market maker's perspective. They literally bought heavily over here in this period. Everybody bought very heavily, accumulated heavily from, accumulated from November 2022 till I would say Jan 2023, almost close to like 3 months of accumulation. Not exactly 3 months, but approx. And then they accumulated it, they let it ride, and now we are into the premium zone. Basically, they are now making a distribution of a pattern. So if you really want to see if this is a distribution, so what you should do is just look at the open interest on the weekly time frame or the daily time frame, which I don't have in the chart, but let me just try and open the coin analyze and look at myself. Coin analyze, open interest. So let's go to the coin analyze, open interest, because I want to see what open interest looks like at this point. You can also see the same on Exo chart. You can see on everything, but you need a subscription for that. But I do think that this is free, so why not we use the free thing rather than paying for. So we go to the weekly chart time frame, and the aggregated open interest. I'm just going to remove the quarterly, bi-quarterly, quarterly, bi-quarterly. April, June, September, May, December. We only want open interest for perpetuals, okay? So I'm just removing it. The open interest is on my another screen that I have, which I haven't shared. So don't worry and don't try to break your head as where is the screen. I'm not sharing it. Just hold on. I'm just going to share the chart actually with you. It's a very interesting chart, and sometimes it also tells a good story. So you need to not only watch the perpetual open interest, you need to add open interest for the coin margins as well, because a lot of story would come. Normally the big players play with the coin margin, including myself. So you really need to focus on the open interest for the coin margin contract aggregated. Open interest coin margin contracts. Perfect. I'm just going to remove the quarterly chart, bi-quarterly, weekly, bi-weekly, quarterly. Just hold on for a minute, guys. Weekly, bi-weekly, quarterly. We only need perpeps, okay? Perfect. Now the story is here. Look at the. So I'll just show you a very interesting story over here for crypto. Basically, I mean, you need to understand this whole story of accumulation and distribution actually. So now let's go to the screen over here. So are you able to see the screen? The open interest one, ladies and gentlemen. So if you look at the screen over here, I don't know where is the, I think this is the drawing maybe. Yeah, perfect. So let's try. So basically, this is your, basically, if you can see here, this whole box that you are watching is your accumulation box here. That's like a very clean discount zone actually. That's like a clean accumulation that's happening. So we accumulated heavily between this for a lot, and the price kept on pumping. So I would say this is like an accumulation, clean accumulation. Okay, after which we just got a breakout, and then we just pumped actually. So that's a different story, but that's like an accumulation. You can see from here itself, the coin margin. So you can see here a bigger accumulation box. So just imagine, I mean, this is like an accumulation that was happening. Okay, so we broke out of it here, retested it, and started pumping back up. So that's one thing. So you see here, a very clean story was coming out of it. So the price was the people started accumulating, the whales started accumulating, the open interest went flat, it bottomed almost around June 2022. The price was just keep on going down. However, the open interest was flat. It was accumulating, as you can see. It was simply accumulating in the box. It accumulated till, you know, $28,000 or $24,000. They have accumulated heavily, but basically they have accumulated so heavily between this whole box that we can see from the price. The open interest rose from 4.8 billion to almost, I would say, went to $8 billion, 8.13. For the perpeps and for the coin margin contracts, as you can see, it went from 1.4 billion to almost close to $2.3 billion, almost like I would say 50-60% move on an upside. So a lot of people accumulated heavily. And now just look at what's happening. So right now what's happening here is that despite of the fact that, you know, we are seeing a nice move here, I would say some sort of a dump is happening at this point. I would say here, but along with this dump, the open interest is also going down. You see, along with this dump, the open interest is going down. In my view, when such sort of thing happens, which means that the market is cleaning the liquidity, you know, it's just cleaning up the liquidity. And if you look at from the open interest perspective here, that's like a support. It's like testing the waters, I would say, previous levels. Though the coin margin contracts never made new highs, but still, I would say it's at support. It's a support. This level is a support. So if you look at the Bitcoin chart over here, open interest is, the price is declining, open interest is also declining. In my view, this is another sign that, you know, people are still accumulating a lot here, which clearly indicates to me that there is a clear sign that the price is getting distributed in this box. So basically the distribution is happening at this point, and we are clearly seeing a distributive pattern. Any pump we are going to see, the open interest is also going to pump, but sold off, another distribution is going to happen. So practically the price is going to dump again. And then what's going to happen is open interest is going to break out, and then the price is going to break out one more time like this, after which we can see a nice move on an upside. So practically over here in this box, we can replicate this pattern practically that we are having it in 2021. That's the pattern. We can have it right now as well. This is a very likelihood pattern that we can form here actually. So something I feel that simply dumping from here to $50,000 or 40,000 would be very, very easy to give to the bears actually. Very easy. I mean, there's no fun in at all actually if it just simply dumps from here. But just imagine people who are waiting for 100K, 90K. Just imagine, we just tease them. Our market makers are going to tease them. Pump it up to 70,000, 72,000. We are going to 90K. Everybody's going to shout and, CT 90K, 90K. And slowly and gradually we go to 78,000. We are going to 100K. Everybody's going to shout. It's like a tease, you know. As and when we break out of this box, break out of the box of 74,000 to $76,000, everybody's going to shout 90K, 100K. And suddenly out of nowhere, we just dump on their face. So it's going to like a clean distributive pattern for, an open interest. So this is like a distribution top that's forming at this point. Very clean distribution is happening. Very, very clean. I would not say a bigger accumulation at this point, but it's more like a distribution that's happening at this point. A dump is happening. Open interest is also dumping along with it. It's a clean sign that there is a distribution is happening, which also indicates that the next pump is also coming. A pump to 79,000, maybe $76,000 is coming. That's a pending pump that's happening. A very clear sign from this, you can say. Very clean. Okay. So that's what I just wanted to show you guys. A very simple chart actually. So practically, for the Bitcoin, I think that's like a premium zone. In premium zone, we distribute. That's a very simple case. Okay. We distribute like this. A chop, chop, chop. Distribution happens like this. Chop, chop, chop. And then we look for a downside after distribution. Or it is like this can be a bigger accumulation. And we run up to, as I mentioned, a bullish count to 100K. Possibilities there. But that's going to be like, we need a bigger, accumulation or distribution pattern. So for now, I see a distribution pattern at this point. And hence, that makes me clear that $78,000 to $80,000 is a very, very nice opportunity. But also, it also means that for a lot of big whales, this is like a premium zone. And unless and until the premium zone is flipped into support or it's getting acceptance on a weekly time frame for like 2 weekly closing above these levels, this is still, they are not going to get interested over here to buy more and more Bitcoin. Only, a person like Michael Saylor would buy Bitcoin at $65,000 or $69,000, but I won't say that the big whales would buy. No, they won't buy. But if you're just countering me, hey, you're wrong. BlackRock is buying. Remember, BlackRock is not buying from his own money. They've already bought at $20,000. They are just gonna buy from the money they're gonna get it from the shares by selling shares. Whatever the net inflows, they're going to get it. Only from that money, they have to buy it so as to match their balance. That's all. They have to buy as per the agreement. Okay? As per the agreement, they have to buy. They don't have any option. Even if it's in loss, they have to buy. So that's how it works actually. So that's like a premium zone. And you need to understand that if this is the premium zone, your equilibrium of this whole situation or scenario would be here. It's a very simplistic chart. You need to understand. This is your range highs. Practically, that's a premium zone. That's your range highs. And that's your range lows. Here. So practically, your middle ground between these two is here. That's another demand that we can have it. So if after the distribution, we see something like this, with the price just keeps on rejecting it, coming back down, we lose it, retest it, definitely we are going here. And then maybe we will see what we want to do. But that's a distribution. This is what we want to play actually, because the range is 20%. From here, from 59,000 to 78,000, more than 20%. From 78,000 to again 60,000, more than 20%. From 60,000 to again 80,000, another 20%. So that is what, there's a huge 20% range that we have. So we need to play that, guys. We need to play and make money out of it, okay? And a lot of alts are going to do really good with this range actually. So that's what I want to explain you what exactly the premium zone and discount zone works actually. Now let's move on to what my friend asked me. I like the web shop. Thanks, my friend. Probably accumulation until September, October. Yeah, possibility is always there. But remember, if you really want to go for like a bigger accumulation of like September, October, which means that you really need a bigger range actually. So that's what I mentioned. We are literally going for a bigger accumulation. I see this as a distribution and not an accumulation, but time will tell whether my view is wrong if this is not a distribution and this is like an accumulation and it's gonna follow the bullish plan towards $180,000. So time will tell, but this to me like a distribution until $120,000, $25,000. This is still a distribution in my view. So that's one thing, my friend. What time frame you think wave to finish? A time frame, I think I cannot say the time frame. But I can only say that this is the target. We need to go there. But if you just look at carefully over here, Normally, you know, wave 2 should finish between 0.382 to 0.5. What does it mean? It means if you go here and if you select the, you know, fib time zone, and if you are selecting the lows here, that's a starting of the lows and ending of the highs here. The starting of the lows and ending of the highs, normally 1618 and 1886 or 2 Fibonacci level is the levels where you would see wave 2 finishes. So basically anywhere between now and 28th of April, 28th of April. So basically this week, in next 2 days, this should be done ideally, or max it goes to 28th of April. That's all. This is the time zone. Basically next 2 days from today onwards, the bottom might be in itself. Wave 2 might be shallow, you know, might be shallow. So, but this is what, from today till 28th of April, this is where the bottom ideally should be in for a wave 2 actually. That's what I've learned actually. I'm not expert in time fibs. I've not studied much about it, but what I understood from my historical, you know, analysis and perspective, by just you know, putting this time fibs from wave 1 and wave 2, that normally wave 2 ends up between 1618 and you know, 2 Fibonacci levels. Max it goes to 2414. That's where it just normally ends, you know, normally ends. So let's move on to the analysis of a Bitcoin. Okay, I'm just going to hide here the bear case scenario and everything else. Perfect. I think something else is there. Perfect. So now that we have a chart on the weekly time frame, I think daily BTC 1-day chart, you want me to check it, right? So I'm done with my analysis, guys. My plan is still same. We are buying the wave 2. That's the plan. Nothing changes. So that's the plan. Let's have another chart added over here as well for USD dominance, and we will also add it for daily. Okay, my plan for the USD dominance seems to have played very nicely. I don't know when I drew this sort of thing, but yeah, it played very nicely. And let me just delete the drawings so that perfect. So let's go on to the USDT dominance chart in 2021. When you want me to check? April 21. April. So that's like a February, March, and April, basically here. April. So what we are seeing is it is similar structure that we have now. Thanks. Could you please check BTC 1 day in April 21? It follows your plan. Bear case. Okay. I think Rick also mentioned, and Rick is also having. I can't hear the voice, sir. Maybe there is an issue from your end, my brother, because I think everything else are able to hear it, right, guys? Just give me a thumbs up if you're able to hear my voice, because I can hear my voice as well on my headphone. So if you can just confirm so that we can go ahead, please. So over here, I think in April, what you're saying to me is, so first this was March and we started April. In April, so we got a move on and upside in April, and then we got a flash dump. We got a B wave here, and then we got a dump like this. And a very similar thing happened with the USD DOM. A pump up like this, a retracement happened, and then the bigger pump happened. So practically I'm just going to draw this here. A very interesting thing. Now, in this whole case, if that is true, actually, that is true. In this whole case, if you just draw the fibs from here to the highs here, one thing to note here is that, you know, the 886 Fibonacci levels, and I'm just going to hide 070 so it don't make sense to me. So I'm just going to have green color for. We literally went to 786, 886 for the USDT dominance, you know, over here 786, 886, and then we started running back up. This is how it just distributed, and then we went down again. Okay, that was like a bigger pattern that we had. Now let's try and compare a very similar pattern for Bitcoin at this point right now. Let's see. And also just wanted to tell you one more thing before I go down there. So, you know, very interesting thing I just wanted to tell you. So we need to compare apple and apple. So this was your range highs. You guys agree, right? This was your range highs. And this was your range lows. So here we took a liquidity on an upside by sweeping the range. That's a very clean, very clean range, you can say. So that's what we did. So we swept the highs, then we swept the lows, we rejected from the equilibrium, and then we dumped. Okay, and we dumped literally to the, you know, big support that we have around $29,700. Okay, so you guys agree with me that it swept the highs. That was the range that we were playing. Now what are we doing right now on the daily at this point? Let's try and understand. So what you guys need to understand at this point with me is we're just going to go for an apple and apple comparison. Okay, so first and foremost, I just wanted to tell you is on the daily time frame, USD dominance is very bullish. Weekly is yet to turn bullish, but when it turns bullish, you literally don't buy anything, even if it looks good. You simply get out of the market, stay in the USDT, even if you have to stay for like a month, and just play scalps for like short scalps, because shorts are going to make good amount of money at that point of time. But right now, what I'm seeing the pattern is a palladium pattern that we are having. Palladium pattern. So let's try to compare the apple to apple. So let's have a draw the range. If you agree with me that yes, previously if you look at in 2021, we did not sweep the highs. That's a first big miss actually. Second, we swept the lows, we rejected from the equilibrium. What happened to my trading view actually? My trading view suddenly stopped. I don't know what happened. Maybe it will reload, probably. Yeah, now it's reloading. So, you know, you have to compare apple and apple from now versus then, because the price action makes a very important, you know, it gives you a very important sequence as to what happened previously. It swept the highs, took liquidity on the upside, took liquidity on the downside, reclaimed the range lows, and then run it back turbo to equilibrium. Could not flip the equilibrium, rejected from the equilibrium, and then it dumped big actually. Okay, that's what it was actually. Where is the chart? Perfect. Right now, if you look at from the perspective of the USD DOM, you want USD DOM to go back down to 786, 886 the way it did previously before pumping up. So practically what we are saying is what we want, or if you really want to compare apple and apple, this is how you want and then we go for a bigger bounce. And trust me guys, after this dump, the bump for the USD dominance is going to be way bigger than you guys can even imagine. A minimum pump is likely going to happen, in my view, would be around a sweep of the highs of 6.5%, meaning there is a likelihood that we might see Bitcoin towards $40,000. Possibility is very, very, very high because of the harmonic that we are having for USD dominance. So right now, if we are now, you guys all, everybody watched the 2022 chart and you have everything in your mind, right? Okay, everything in your mind. I mean, I've already explained to you in 2021 from Bitcoin perspective, it swept the highs and then it swept the lows, reclaimed the range lows, and then it pumped. And the USD dominance, it went to, you know, it had a very similar pattern like this on the lower term time frame. If you just look at the 2021, that's a clean pattern that we have. And after that, it just went to 786, 886. And then we started pumping heavily towards an upside. So first, now currently, if you want to compare apple and apple, first, we did not took the liquidity on upside. Now we are having equal highs over here. Okay. That doesn't also mean that it makes, you know, Bitcoin very bullish. Okay. It doesn't also mean that it's going to make it bullish, but what makes it bullish, that the USD dominance need to have a retest of 786, 886 Fibonacci levels one more time. So when it retests these levels, we can just literally, you know, sell everything, get out of the market, try building short positions across the board in the whole market, and then probably that's how you know, we're going to save ourselves from, you know, the big dump that's going to come actually. So that's the one way of looking. The bear case scenario for BTC is going to play out only once it starts losing these levels of 58,000, losing. I'm not saying wick, losing. We start closing daily under this. You're going to see a bigger sell-off on Bitcoin to $51,000 immediately, sweep the lows, and it's going to go to 49,100 in no time. It's like going to get wrecked. That's how it's going to go. And then we will see some pump relief bounces and then further dump to $39,000. That's the bear case scenario. And that bear case scenario is we already having. Ultra bear case scenario would be. Right now, the probability is low because we have a lot of confluence for an upside rather than confluence on the downside, because we don't have a confirmation at this point that this downside is valid, you know. So basically, in my view, both are very, very different at this perspective. In 2021, BTC made a rising wedge. Exactly. Now you got the point. In 2021, BTC made a rising wedge. Over here, we never made a rising wedge. There is no rising wedge. For a rising wedge, it should have done something like this, you know, rising wedge to happen. Pump it up, further down, pump it up like this, break the lows, retest, and boom. And then you can say the pattern is valid. We did it? No, we never did it. So the rising wedge is not a valid one, first thing. If you're talking about the, you know, right now, it's more like a very interesting, you know, flag that's happening. So both the patterns are clearly different actually, my friend. But good point you came, brought this. So now we know if we really want to get out of the market, you just want USD dominance to be here. Whatever the price BTC would be at that point of time, just get out of the market. Yeah, a worst case scenario, as I mentioned, it can just wick one more time, probably go one more time here, like this maybe, and then run it up. But that pump is inevitable. It's going to come. It's going to come. This pump on the USD dominance that you know I've shown you, it's going to happen. So practically, in my view, I think Q2 is going to be slightly bloody than what people expect actually. And maybe Q3 is going to, as Gabriel mentioned, we will see Q3. So not Q4, Gabriel. As you mentioned, September. So September falls into Q3. So yeah, Q3 in my view would be more of a sideways accumulation, and then we're going to pump, you know, September, October, November. That's how we're going to pump actually. So practically, these are the two possibilities for the USD DOM. So you need to understand, guys, right now, this is how the plan should be made actually. Yeah, you really want to be bearish on the market? Yes, be bearish on the market. I give you the red flag. I give you the, I allow you to be bearish only once we start losing this yellow line, the range lows of 60,700 on a daily time frame. We start closing 2 daily under this, khalas. The price is going to nuke. It's going to get wrecked. $50,000 would be your first stop. A little bit, relief bounce. And then it's going to further dump it back down straight away to $39,000 in no time. So you need to understand, guys. You need to understand at what levels you want to be bearish. You need to understand at what level you want to be bullish. You need to really need to understand. One thing I can tell you is, weekly time frame on the USD dominance is, is bottomed. Weekly is bottomed, daily is bottomed. So from the RSI perspective, it's bottomed. So now let's go to that chart as well, because we can't contradict ourselves. We need to understand. We want to be bullish. You really want to be cautiously bullish. You don't want to be bull like a blind bullish. No, we are not here to be like a blind bullish. So normally bulls are blind actually. They don't see anything else above their targets. Right now, you see we are just trying to retest the RSI based MA. So I'm expecting it to reject and come back down and retest the 50. That's how we're going to get our target for Bitcoin. For the USD DOM. So practically a small push up and then reject and come back down. So if we fill our zone and then we go up. But I'm missing, the point over here is we are missing a very interesting, weekly chart. And the weekly chart suggests, even the daily chart, if you see here, from these levels, we are having a very interesting neckline. And there is a possibility we're going to form a very interesting inverse head and shoulder here. That's how, the market can give us that pump to 78,000, maybe 80,000. So just dump it down and then we go for a full-fledged run up. It also goes with the plan with the weekly, because if we get a dump, we get a bigger inverse head and shoulder on a weekly time frame with a deviation, ladies and gentlemen, on RSI. So I believe, this is like a first time in the history of RSI for USD DOM. We literally topped around here with the green, with a V-shaped recovery, and we are going to literally bottom here with a red, with a V-shaped recovery. And hence, in my view, I would like to see a move on the downside for like USD DOM. Go to retest the support, break out. Once it breaks out, you just get out of the market. Stay out of the market for like few months actually. No long anything, only short. That's all. Short the bounces. But that's how you should play. You as a trader, I want you guys to up your game. As a trader, you should not only be bullish on anything just by simply looking to the chart or just by what someone is going to tell you. No. Look, USD dominance chart. USD dominance speaks it's bullish, stay out of the game. Even if that coin looks bullish, stay out of the game. Because if USD dominance looks bullish, you're just going to get out of everything. That's all. Finally, we want to make our net worth increase, not decrease. Okay. So that's all for the today's stream, guys. And give your heads up if you have any feedback on our website, the new website. And also, we have launched our bot, guys. I'm going to make a video today and I'm going to upload the video on AI bot as well. How to use it for those who don't know yet to use it, because I've showed earlier as well how to use it. Also, I'm going to make some new videos on the education content. That's going to be very, very helpful. So I'm just going to, this week is going to be super tight for everything. We are launching our new screener on our website. I hope you guys are using the divergence screener, the breaker bot screener. The third screener is going to be one of its kind. I can promise you, one of its kind. You won't find such screener anywhere in this whole market. And for all the premium members, it's for free. This is the development that we are doing. I'm just trying to keep on investing my money for you guys so that you can get one of the best platform in this whole crypto space in just a small amount of money for like $21 for those and $35. That's all. Okay, and slowly and gradually after the launch of the screeners, the next step is to build a login platform. And once we have a login platform connected with the Discord, the whole screener thing will only be available for the premium members. And simultaneously, once the login is done, we will also make a mobile app for you guys for iOS and iPhone, both the users. So if anybody is feeling, because you can't be on your on your chart every time, you can't be on the desktop. So if you want to use a mobile app, so that's our plan for Q3 actually. Mobile app, we will launch it so that once we have the mobile app, once we have the login function, you will also be able to have a notification function as well. So you can get a notification, you can set a notification if something is having a bullish divergence, something is having a bearish divergence, whatever you want, you just simply click the notification and you'll get you will be notified by an app or via mail actually. So we are working slowly and gradually. We are building step by step. First of all, we are building product. We want to give you the screener so that we don't miss the whole pump or dump or the price action that's going to come in from now on. So that is my priority. I did not focus first on making login and secure this. No, my first thing is we want a product because I want this product. I want to use it personally. I don't know if you guys use it or not, but this product we are going to launch, the trend screener, is personally for myself because I wanted to make it for myself. I wanted to use it. So important for us to have this those kind of insights actually. It's really, really important. INJ, I already discussed, my friend. This is my plan for INJ. If you look at from the fibs perspective for INJ, the perfect fib levels for INJ in my view would be somewhere around golden pocket zone, or I would say 702 Fibonacci levels to 786 Fibonacci levels. So practically anywhere from, and maybe even golden pocket zone, you can add it. So 22.6 to 20.6 is what the levels I'm aiming for INJ. Practically anywhere from here till here, that's the buy zone for INJ, and we're going to buy it because I do think INJ is going to really, really do good actually, really do good. So yeah, I think it's just following a plan like what Bitcoin did. In my view for INJ, it's a perfect blend of I would say a very, very interesting, a bigger broadening top pattern that's forming here actually. That's what the Bitcoin actually did. So everybody was bearish on Bitcoin at that point of time. I'm telling you that INJ in next few days or maybe next few weeks time after this, in my view, I am seeing INJ doing something like this and going to $62, maybe even $80, depends. But that's what I think INJ is going to do. So if you literally want to buy INJ at $21, if we get it, just imagine making 2x easy peasy actually. So my colleague Kobeb wants to just have a look at Rose. This is the last chart I'm gonna check it for today, and we're just going to end our stream. We're going to have another stream in the New York session as well. We're going to have 2 streams daily, and in between whatever these calls I see, we're going to give it. Also, I've personally started giving trades in the prop. Me and Short both are giving. Yesterday I lost around 0.5%, but that's fine. Losses are part of game until our risk is managed. So someday it will be lost, but overall my plan is to risk low and to make big actually. So if you're risking $20, my target is 10x, 10R, 20R. That's what I'm target. So we're gonna make it, guys. Just follow my plan for the prop challenge, and I'm damn sure we all gonna make it. So Rose plan at this point, it's at support, my friend. It is at support. What I can see so far for the Rose is a very interesting diagonal over here for the Rose actually. Yeah, very interesting, very, very interesting diagonal. That's a very cool diagonal actually, I would say. I mean, I've never seen sort of a beautiful, perfect diagonal actually. Very interesting. You can also say it's like a bullish wolf wave. So if it clearly tells and trends to tells me that there's a possibility the bottom might be in, okay? Because normally the target for the diagonal is the sweep of the lows of wave 4 actually. So this was your wave 4 over here, which we already swept. The bottom might be in, But as I mentioned, if everything we are expecting a pullback, so this is how you can say that like a double bottom maybe sort of thing. And we are already in the 702, 786 Fibonacci levels. So that is like our, buy zone actually. So it is in our buy zone actually. So practically we're just going to accumulate a little bit, chop, chop, chop. And I'm expecting this like a wave 1, wave 2. I'm expecting to do something like this from here, and then come back down and then run it up like this. So rose is definitely looking good in my view. A dip is definitely for buying. Your invalidation levels for a rose would be if we start losing this support that we have or this zone that we have on a daily time frame, on the weekly time frame, then it is going to turn very, very bearish. So practically losing 7725 would make it very, very bearish. For now, I think it's bullish. The structure itself is very bullish. Just look at here, inverse the chart. What do you see? I mean, that's a perfect blend of a very interesting falling wedge, or I would say bullish wolf waves, a bounce, a bullish wolf waves target, a bounce, and then further dump. It's a perfect pattern, you will ever see on various chart. You can see it, but this is how I see rose actually. It's a perfect, valid pattern. And the target for the rose would be, minimum target would be around 25 cents is what the minimum target would be. So practically you can aim for a minimum of 2.5x to 3x for rose actually. So that's all for today's stream, guys, for Bitcoin. And I've made my plan. So for Bitcoin, and let's try and play on the lower term time frame. If you just want to play the lower term time frame on the 15 minutes time frame, let's say, and not the 1 hour chart, there is a possibility, for a bounce over here as well, because I'm seeing a very interesting M pattern formation over here. So practically, if you're just holding over here the lows of Bitcoin, maybe we can sweep it one more time. I'm not sure if for any regular expanded flat like here. So we already went to 886. So now I think if we really want to pump up, if you're holding the $63,700 levels for Bitcoin over here, if you're just holding it, I think Bitcoin, I think I'm expecting it to run up to $65,000 for Bitcoin, maybe even 65,121, but I think this is how I see for Bitcoin, and then down. So the scalp is a possibility over here, and another scalp is we can just sweep the lows like this. And once we sweep the lows, then the target would be only $65,000, bearish retest, and then further dump, which is very good actually. So if you really want to scalp, this is how you should be scalping it for Bitcoin, with a very tight stop loss. Your stop loss should be under 63,500 ideally, and your take profit targets will be 65,100 minimum. And the alternate case would be we just simply go here to 65,800 as well. It all depends actually. So I think that can be a lower term time frame scenario for Bitcoin, guys. So for this is the levels where you should be looking for some scalps for Bitcoin in my view. That's all for the today's stream, guys, and have a nice day, guys. If you have any queries, any questions, do ping me, do ask me. I'm here for you whole day. Finding I'm just having my gold chart here. The setup is there. I'm just going to play the way it shows us. We have a bullish chalk here for gold. So I think what I'm going to do is any pullback I'm expecting here on gold towards the levels of the order block that we have around 2,300, maybe even 2,316, and I would be looking to buy for pumping up to $2,340, $2,400 because we have a GDP data today. So I think I'm bullish on GDP. So I think gold should also be doing good actually in my view. So that's all, ladies and gentlemen, for today's stream. If you like this video, please like. You are almost close to 100 people on this stream. So I just request each and every one of you to just press like button, guys. It don't take much time for you just to press like button and share this, please. So do it, guys, and thanks a lot for support. Have a nice day. Bye-bye. Take care.